Welcome to Upticks. I'm Jake Falcon.
And I'm Corey Bittner. We're the founders of Falcon Wealth Advisors and your co-host for Upticks.
Today is our 30th episode, Bird's Eye View.
We're going to talk about 2019 goals, questions worth asking, and our new Robo-Advisor flight.
Okay, Corey, so to kick off our financial planning goals for 2019, I know you developed a little bit of a checklist of things that you and I and the rest of our team are going to start going through with our clients. So why don't you share with our audience maybe some of the ideas that you've come up with?
Sure. So I have 5 ideas. Some of this was prompted by something that I read online, but it was just thinking about, okay, now that we're at a year end, fresh start, it's a new year, what should I be thinking about? What should I be doing?
Okay.
So first, these are kind of, really, I would say must-to-do steps, or at least visit in 2019. The first one is rebalancing your portfolio. Obviously, for our clients, this is what we've been doing over the last couple of years. But if somebody is watching this and you haven't done that yourself, especially after all the volatility that we've seen in the market more recently, it's probably good to evaluate if you have a target allocation of stocks to bonds, that you're still in line with that. And if you're not, perhaps now is a good time to take advantage of making changes.
That's a really good point. So I wanted to elaborate on that a little bit. So for our clients, we use a 5% threshold. Mm-hmm. So the idea is that if you have a 50-50 stock to bond blend, with the S&P 500 being down 6% last year and the global markets or the MSCI being down 10, more than likely your stocks might be now, let's say 45, and your bonds might be 55. So are you suggesting that people maybe should even look at, if they are rebalancing, buying more stocks now?
Yeah, absolutely. If their allocation dictates they should do that, and if their goals haven't changed significantly, absolutely. If they have cash built up, if they have bonds that have appreciated in value, we've really seen toward the tail end of 2018 and even out of the gate in 2019.
That's right. The bond market did rally.
Bonds have actually rallied. Yeah, that's been a place where our clients have made money.
Yeah.
So taking some of the gains from the bond side of the portfolio and going and buying stocks with those, this might be an opportune time to do that.
Perfect. So, and for our clients at Falcon Wealth Advisors, they don't need to worry about that because we have discretion on our accounts and we go ahead and do that for them.
Correct.
At no extra cost, that I might add. A lot of advisors will charge different fees based on stocks or bonds or different products for our clients. It's kind of a flat fee, and so if we buy stock or bond, it doesn't cost them anything differently.
That's a really good point. Our clients, hopefully, can rest assured knowing that if we're making changes or doing things like what you just described, selling bonds and buying stocks, we're doing that to help the account grow and not for any other reason.
That's fiduciaries. Okay, perfect. So that's a great item to kick off your list. What else do you have?
So first was rebalance. Second was reviewing your financial plan. I don't think I need to go into a ton of detail as far as that goes. However, I know that you and I are meeting with clients. We've talked a lot on these podcasts the last couple of weeks or months even about how reviewing your plan and making sure that it's on track is smart to do. I think just having a fresh start in a new calendar year, because the plans do go year over year, now is a good time to review it.
That's a good point.
That's what we're in the process, obviously, now that we're into a new year, of setting up those reviews and meeting with our clients to discuss that with them. And if you don't have a financial plan, the beginning of a year is probably a good time to develop one.
That makes good sense. And, another point there is, obviously nobody likes years like 2018 when you're investing in the market.
Sure.
But I think our clients, see the value that we add. That, I've been meeting with a lot of clients lately, and I'll say, hey, 2018 was awful. Nobody's happy about it. We did what we could. The markets did what they did. But your plan still looks good.
Exactly.
And if it doesn't look good still, then the good news is, like you said, we can make changes or adjustments to make it look better. But typically one bad year in the market's not going to throw off a plan too much. And so it's important for people to gain perspective on that. So it's good.
Exactly. And ignorance is not bliss.
No,
in a sense. It's good to review that and have those discussions. Better to have it today than 2 or 3 years from now when it's like, oh, we could have done something back then,
exactly.
But today we can't.
Right.
Because it's too late.
Right. Good. So what's the third item you had?
Next is fairly straightforward, but reviewing beneficiary designations. If anything's changed, if anybody's gotten married, if anybody's names have changed, if there's, God forbid, been divorce, remarriage, whatever it might be, particularly on retirement accounts, because beneficiaries are going to, maybe even you created a trust or a will in the last year, your designations, your beneficiary designations in your retirement accounts will still trump what that lists.
Right.
So it's critical that they're right. And I think it's smart, at least once a year, to just make sure that everything is still set up the way you want.
Yeah, good point. So as part of our process, we like to review that with our clients twice a year. But if you're managing this on your own, or certainly if you are still working and you have money in a 401k, it's not a bad idea to log in or call your 401k provider and say, hey, I just wanted to review my beneficiaries, make sure that they're all up to date and accurate.
Sure. Or if you're even thinking about our accounts that we're managing here, right?
Yeah, because we can change them here certainly also.
Exactly. And that's something we can do.
That is something, though, that we don't do automatically for our clients. It's a good point. So we may be managing the investments and tracking the plan, but it's really up to our clients to tell us when they want to make changes to their beneficiaries. Now, when we review with them, we'll bring it up. But if you've had a major life event and you want to change something, there's no reason to wait for us. You certainly just give us a call and we can update that.
And in my opinion, it's just one of those things that it's a new year, it's a fresh start.
Sure.
Let's at least once a year, let's make sure it's right.
Makes sense.
Next is reviewing your estate plan or creating one. That, again, is relatively self-explanatory, but I know it's frequent that I meet with people who say, we have these boxes that we're trying to check. We're trying to get our financial plan in order. We're trying to get our retirement plan in order. We're trying to get our estate plan in order, and they're doing those things, sequentially. And the idea, though, is they reach a point where it's like, okay, maybe this is the year where I'm going to actually do this, and it's going to give me a sense of relief, so I don't have to worry about it anymore.
Yeah. So it's meeting with an attorney, learning about what a will is versus a trust, and just going down that road and making sure that everything is set up for you and your family. Makes good sense.
And then lastly, and most exciting for dorky finance guys like us, and looking at the new contribution limitations for retirement accounts, and evaluating what it is that you're contributing to your accounts currently, if you're still working and saving, and two, how much more can you save now in a new tax year, because there have been some things that have changed. The first one being 401k contributions.
Okay. So what's changed?
So in 2018, if you could contribute up to $18,500 per year to a 401k, in 2019 you can actually contribute up to $19,000 a year. So it went up by $500 per year, which is roughly about $42 more per month that you can save.
Gotcha. So you need to go in there to your 401k, and if you're already maxing it out, based on a percentage basis, you can go in there and tweak your percentage or your dollar amount withholding and make sure you're taking full advantage of that. Okay.
The catch-up contribution, if you're over the age of 50, is still the same. So
what is that?
$6,000.
$6,000. So someone over 50 can save $25,000 of their own dollars into a 401k on a pre-tax potential basis.
Yep.
Okay.
That's exactly right. Next is IRA and Roth IRA contribution limits. Those have gone up $500 each per year also.
And what are those then?
So it went from $5,500 a year up to $6,000 a year. And then the catch-up contribution is an additional $1,000 a year.
Okay.
If you're over the age of 50.
Okay, so if you're under 50, and there's also income limitations that are associated with an IRA versus a Roth. And really the difference is a Roth is funded with after-tax dollars.
Yep.
Typically you would prefer to fund an IRA with pre-tax dollars. Again, that's something to consult your tax advisor with as far as which one makes sense tax-wise. And again, there are limitations to those. But if you're already maxing out your 401k, for example, you can go and fund another $6,000 potentially in an IRA and a Roth. Is that correct?
Yes.
Okay.
Yeah, at a very high level, yes.
Okay. So,
but I also wanted the income contribution limits that you talked about, particularly for a Roth IRA, those have gone up too. So that's the other thing that I want to point out. So in 2019, people can earn up to $2,000 per year more than they could have last year and still be eligible to contribute to a Roth.
Okay. So perfect. So all those have changed also.
Yeah.
But you can do a 401k contribution and an IRA or Roth contribution, correct?
Yeah, you can. It's just
that was my point.
On the IRA side, whether or not it's tax deductible depends upon a number of things. But yes, you can.
Right. And again, you'd want to consult. I mean, we can talk about this on a more custom basis with our clients individually. But certainly there's some tools out there and vehicles to save, and the limits have gone up, which is an exciting thing.
Exactly. At a very high level, that's exactly what I was getting at. And if people are in the process of saving for their own retirement, which is becoming more of an individual saver's responsibility, the good news is you're going to be able to save more now that we're into a new year. But ideally don't let any years pass you by. The best time to invest typically is right now.
Right.
It's because of compounding. So if you can start saving more, now's a good time to look at it.
Perfect. Good. I like your checklist. Thanks for sharing that.
That's it. I think we touched on all of them.
So there's 5 things to think about. Definitely gets the wheel spinning a little bit. We're here to help guide our clients through all of those decisions. So certainly if you would like to hear more about any of these topics, feel free to reach out to us.
All right. That's good. So let's, switching gears a little bit and talking about investments, I kind of introduced in our intro today that we wanted to talk about our new Robo-Advisor flight. So first off, why don't you talk a little bit about what a Robo-Advisor is, and then can you tell us a little bit more about what it is that we've launched?
Sure, absolutely. So the past few years, technology has certainly well made its way into the financial industry. And there's been a lot of platforms pop up for the do-it-yourself investor or maybe somebody just starting out. And what it is basically, in today's era, more and more people are getting online or using technology to manage other parts of their lives. And so now they can do so with their financial aspect as well. So this would be investing outside of a traditional 401k. So for example, if you did want to start a Roth IRA, but you still wanted to gain access to Falcon Wealth Advisors, we've built out basically an online portal where individuals just starting out in their investment career, for lack of a better term, can go online, still get our expertise, still get our investment recommendations, most importantly, still have access to our team and be able to invest their money in the markets.
Interesting.
Yeah, so we've called it Flight, and it's not available out there to the masses, so you still have to contact Falcon Wealth Advisors first, and we can give you the private code to get yourself enrolled. But after that, basically we manage the investments for you. You have access to our entire team, our practice, as far as financial planning and any other questions you have. But it's basically a gateway in investing versus going, I guess the difference would be if you went to, let's say, Vanguard directly. Typically you're calling a 1-800 number. You may have to pick your funds yourself. They may not pick them for you. So the idea is that we can provide still a custom solution, but be able to do that online.
Makes good sense. So you touched on this briefly, but who would this make sense for?
Yeah, so normally it makes sense. And the way that we've had to set it up is, I think we talked about this on our last episode, is that we like to use individual stock portfolios and individual bond portfolios for our clients. With this Robo, we were not able to do that because, again, it's an online kind of program that's rebalancing on its own. And so, or with our help, I guess I could say. But so we use exchange traded funds. So it's basically somebody that maybe they're starting out and they don't have, $200,000, $300,000, $400,000 to invest today, but they understand the importance of it and they want to get started now. So I think this is really for two types of people. One, it's the millennial that's, again, looking to get into an investing, but maybe they don't know where to start or how to start. Our minimum for this platform is quite low. It's only $5,000 to open up an account. So for example, you could put $6,000 in a Roth IRA and get started. And then you'd have access to all of our intellectual capital along with our team, and we'd be managing the portfolios for you. And then the whole idea is we're using it more of as a feeder fund that once you get to $200,000, $300,000, $400,000, for the same cost, actually, we'll invite you over to work with our team, and you can get a custom financial planning solution and more work on your plan from there on out. But if you also wanted to stay using the Robo because you were comfortable with it, that's certainly your option as well.
Gotcha.
I'd also say for the second type of person, this might be the busy executive that maybe doesn't want to come in and meet with us, which we completely understand. We don't take offense to that. You and I love talking about finance all day long with our clients. It's something that we really enjoy. But I get it. If you work 10 hours a day and you travel a lot for work, you might think about your finances at midnight, when
right.
I'm asleep, right? And so this is another way to get access to our expertise. And maybe you have $1 million or $2 million, and you say, you know what, I get it. I like you guys. I see your content. I believe in what you believe in. I'm just going to go online, set it up myself. I know that you're watching it and managing it, and I'm okay with that.
That makes good sense. So it's just depending on who the person is,
Yeah.
It's just another way to have access to the services that we provide.
Yeah, exactly. So, basically it's around the clock coverage now. So again, if you don't have time to meet with us,
Yep.
Or don't want a face-to-face, you say, look, I've got some money. I know it needs to be invested. I'm not watching it. I know you guys, I trust you guys as fiduciaries are going to watch it. You're going to take care of it, and you're going to be there for me if I need anything, but I don't really have time to come in and meet with you right now. That's another solution that we wanted to provide.
Good.
And it's really a matter of staying up with the times. Part of the favorite part of what you and I do is meeting with clients face-to-face. And
Sure.
so I'm not suggesting that we're doing away with that or replacing that. We basically want to offer what people want. And this Robo-Advisor, craze just continues to grow. And I think as people embrace technology and technology grows, it's just something that we'd be silly not to offer it.
Right.
And that's why we're offering it to our
And to the
clients.
point that we touched on our last show here was that depending upon going back to somebody who might just be starting out or somebody who maybe inherited $10,000 or $20,000 that they need to invest, we touched a little bit last time on how depending on how much money you have to invest, buying individual stocks and individual bonds, you might not be able to get as diversified doing that as opposed to something like this.
Exactly.
Can have you diversified.
Yeah, what we've realized,
grow.
Yeah, I know you and I pound the table on, buying individual stocks,
right.
And not using products, but the reality is if we're going to be true fiduciaries, somebody has $5 or $10,000, can they really build out an entire bond ladder, and can they buy 35 stocks, and can they do all the things that we're doing? They can't. So the next best solution would be this Robo platform, and that's why we've built it. But idea long-term, we would want to flip that over into stocks and bonds. So that's what I kind of commented on. It's more of a feeder. Let's get you started. Let's get some money in the market. Let's get it invested so you kind of understand how that works. And then as your portfolio advances and it gets larger, at that point, we can provide more of a customized solution for you with the individual stocks and bonds.
Yep, that's great. So it's staying up with the times, like you said, and rolling out something exciting and new for 2019, so we can keep things growing.
Yep, exactly. And so again, that's part of why we formed Falcon Wealth Advisors, is that we didn't want to stick with the status quo. We wanted to be progressive. We wanted to help people in the Kansas City community and around the country, and that's why we're offering this. So please don't be shy. If you want more information, you can certainly reach out to Corey or myself or anyone on our team. We're happy to get you set up. It's actually really easy to do.
Great. Thank you.
Okay. On to our next topic here, which is questions worth asking. And so this is where we try to stump each other. And maybe not so much with that, but really what we're looking to do is share real-world questions that come up as we meet with our clients with each other, because we think that potentially other clients or other individuals may be asking the same questions, and so we want to answer them on our show. So do you want to ask me first, or would you like to ask me, or vice versa? We want me to ask you first?
I'll ask you first.
All right, fire away.
So to get us started, my question is, what should I do if we are already in a recession and we don't know it, or we're headed into one in the next year or so?
That's a great question. The media has been talking a lot lately, about obviously the market's pulled back tremendously here in December, and there are fears or definitely concerns of a recession. First off, to technically define a recession, it's basically 2 consecutive quarters of negative GDP or growth, basically. We haven't had that, so none of the economic indicators tell us that we're in a recession or even close to one, but that doesn't mean it certainly couldn't happen. So to answer your question, what should I be doing? I think you go back into this checklist. Most importantly, you rebalance. We realize that nobody can time the market. You want to make sure that you have an appropriate bond allocation if you are retired. Mm-hmm. And the whole idea is that we want to keep at least 5 to 10 years worth of money in bonds to weather a recession. Normally in a recession, the Fed will come in and they'll lower interest rates, which actually would cause bonds to rise. And so that's the first safety net that we have in order. We also have individual stocks that pay dividends. So again, that would be another income generator in a recession. And so I'd say to answer your questions, we want to make sure that your portfolio is set up to weather that storm, which with our clients, we like to make sure first and foremost, because we have discretion and we are managing that. And then 2, we want to make sure your financial plan is in order and that we have all of your assumptions and your goals correctly defined. But you can't time it. Recessions are going to happen. We're going to have them. That's
part of the business cycle, right?
Exactly. That things peak and valley, and that's part of it. And we certainly, it's been a long time since we've been in one. But I think that fear very much is on people's minds still. And, that's part of our jobs. I always joke with you, that's when we earn our fees, is when we get clients through recessions. And so, for our clients that say, we have you prepared, we know what's going to happen, but we don't know when it's going to happen.
Right.
So for us, we just want to make sure that your portfolio is in order, that you have enough income generating investments to weather that storm, and that your financial plans, that we have a clear understanding of what your plan is.
Makes sense. So I think what you're telling me, though, is they are normal. They do happen. Unfortunately, we can't time them, but just because those things do occur doesn't mean that, the stock market goes to zero and the world ends.
Right. Yeah, exactly. I mean, so the stock market's never gone to zero as a collective. And so, again, recessions are going to come and go. No one can predict them. The whole idea is that you want to have a portfolio built to get you through them.
I'm kind of throwing a little bit of a curveball at you, but why is it that after the market goes down, people are just so convinced that the market's going to go to zero?
Because we're human and we think in straight lines. We think in linear terms. And so when it goes down, we don't think in loops, right? So if you're driving a car, you look in a straight line. Or if you're running, you run in a straight line. And it's a linear way of our minds, the way they work. We think if something is this way today, that's how it's always going to be. Mm-hmm. And, that's part of one of the values that we add is helping people realize that the market doesn't work that way, that it does go into loops and it goes into cycles. Just like 2017, I think people started to think their account's supposed to go up every month or every year.
Yeah, month over month, year over year.
And it doesn't, right? And I think that's a perfect example. Is we had a great year in 17, had a bad year in 18, so people know it can go up and it can go down just as easily. Really, nothing has changed fundamentally, right, to cause either of those. So the idea is that the market goes up over the long term, or at least historically it has, and that's what you invest in, is the long-term growth. And then your short-term money are in safer investments like bonds or cash to help you weather those storms.
Makes sense.
Yeah, but I think as humans,
psychology that it's interesting.
Yeah, I think as humans we just we think in straight lines, and if you're not in finance and you're not looking at it constantly like we are, I think it's easy to forget that. And I think the media does a good job of scaring people, frankly, and so that's another part of it. Is that the news channels, they don't make money unless people are watching,
right?
And one way to get people to watch is fear and greed, and so they scare the heck out of people and. You're going to tune in, and they're going to sell more ads,
right.
And they're going to make more money, and that's what it rolls over to. And so,
yeah, I joke sometimes on Twitter about how CNBC sends push alerts to my phone, and when the Dow Jones drops 500 points, I'll get a notification on my phone in all caps. Dow Jones plunges 500 points, and it's like, oh shoot, I better go make sure everything's okay.
But what about when it's up 300? You still get an alert, but it's much more muted, isn't it?
Right, it's much more, it's sort of like calm, like this is normal, right? But when it's down, it's like, you better drop what you're doing, turn on the TV and hear what we have to say.
Exactly, so they can sell ads. That's why they do it. And I had a client point out to this the other day. Actually, he made a good comment. He's like, why would they do that to themselves? Because if they're scaring people and it's causing the market maybe to go down even more, they're just hurting their own stock price, which he made a really good point. So,
you mean like the parent companies?
Yeah, but and then you got to think though. But ultimately, they know it's about earnings.
Right.
So I think they don't care if they scare people because they know that they can sell more ads, they'll make more money, and their stock will go up as a result of that.
Right.
Not the short-term
interesting
fear that they. But he is a really good point that we were talking about that, just that. Another good point I like to make is that if you're watching the Weather Channel and they say it's going to be 75 and sunny, you're going to turn off the Weather Channel and you're going to go outside.
Right.
Right. But if it's going to be a tornado or a hurricane or flooding or whatever, you're going to keep watching the Weather Channel.
Right. Yeah.
Same thing with the market. It's the same thing.
I've noticed that there is maybe it's Bloomberg that tracks it. I think it might be Bloomberg that tracked bear market or recession headlines and then what the next 12 months returns in the stock market looked like.
Interesting.
And it was, they pointed to obviously when there's been bear markets or the markets come close to being down 20% from its previous high, where that spiked, forward returns for stocks were actually much higher.
Yeah. Yeah, it makes sense. It's also called the contrarian indicator. So people,
exactly.
Basically doing the opposite of what human emotions say to do.
Yeah, or Google Trends is another interesting one where you can go and type in, what is a recession? And then you can see how many people have been searching for just that, and it spikes when people start to get
the market
freaked
does
out.
better?
No, that you can see the trend.
Oh, I see.
Looking at what the market is, you can
Interesting.
go and look at Google Trends and see what people are looking up.
That is interesting.
Yeah.
Okay, so good. So hopefully I answered your question.
Yeah, I think so.
Okay. So for my question for you today, I had a client ask me, and this is a really good one. He said, I get it. My bonds are paying 3, 4, 5% interest, whatever they are. But why would they ever show up negative in my account? And, before 2018, bonds had a rough go of it. Before December of 2018, bonds had a rough go of it. So how would you answer that question saying, hey, my bonds, they're showing down a little bit. How is that so if you're telling me they're paying me 3 or 4 or 5%?
The short answer is because of whatever prevailing interest rates in the market are doing. But let me explain that a little bit more detailed. So first off, if you go and buy a bond, for instance, if I buy a bond of Apple, we've heard a lot about Apple here in the news recently. If I buy a bond that Apple issues, so they're the creditor, I'm effectively buying Apple's debt. And if I pay them $10,000 for the right, I pay them $10,000 for a bond, they're going to pay me 4% interest for 8 years. The idea is when that bond matures, I'm going to get the $10,000 back that I paid for it, and then throughout the life of it, it's going to pay me 4%. However, if interest rates go up, like the Federal Reserve, for instance, has raised interest rates 9 times since 2015, when interest rates go up, the value or the price of bonds goes down.
Why is that so?
Because new bonds that are being issued are paying higher interest rates than the ones that I already own.
So Apple, if they were going to issue a new bond, would have to issue one maybe paying 5% or something
Yes.
Because that's what the prevailing rates are.
Therefore, mine is less valuable, so the price, which is determined by the open market, might be lower. So if I paid $10,000 for that bond, now on paper, that bond might only be worth $9,500. Meaning if I wanted to go sell it today, I would actually have to sell it for less than the value of it, or the principal value of it that I'll receive upon maturity.
Gotcha. But if you wait until maturity,
I get the $10,000 back.
right? So that's why on your statement, what we always do is we want to show, or Charles Schwab, our custodian, shows on the statement what that bond is worth if you sold it that day.
Exactly.
So that's why your bond, quote unquote, performance could be potentially negative, because if you sold that bond and interest rates went up, like you said, they've gone up how many times?
9 times.
9 times in the last 3 years
The
plus
Fed has
now.
raised rates, yeah,
wow,
exactly.
So they've gone up 9 times. So again, that would cause bonds to go down a little bit. Typically, when that happens, there's other factors that go in, obviously, into the
Sure.
pricing of the bonds. But this is just a high-level overview that could show your bonds potentially being down a little bit.
Right, but generally speaking, if you are laddering bonds, meaning if you have $500,000, $500,000 going into bonds, and you're buying $50,000 worth of a bond that matures in 1 year, 2 years, 3 years, all the way out 10 years, if you have principal coming due every year, you're receiving principal back, and hopefully you don't have to, and circumstances can dictate it, but if you don't have to liquidate or sell a bunch of your bonds before their maturity, it doesn't really matter what the value is on any given day, because we know when you're going to get your principal back, we know what it's going to be worth, and we know the interest rate that it's paying you between now and then.
That's another good point. So we're recycling that bond portfolio. We don't just hold on to them. We'll trade them if it makes sense, and then as they mature, we're reinvesting them into new bonds. And again, that's at no hidden cost to our clients. We're not charging any hidden fees. It's part of the overall structure.
Did that answer your question?
I think it did.
About
Good
why
job.
your bonds would be down?
Yeah, no, it's good. And hopefully that made sense to our audience.
Yep.
Okay, so now for our fun global topic. As of the recording of this show, the Chiefs have become home field advantage to the playoffs. We don't know who they're going to play as of the recording. I'm sure once this goes live, or once we publish it out there and send it out to everyone, we'll know. But I guess I wanted to get your predictions for how do you think the Chiefs are going to do, and what do you think? What do you think moving forward here? They got to win 2 games at home, and then they're in the Super Bowl. So what do you think?
Well, first and foremost, we probably need to take kind of growing up in St. Louis, right? I actually grew up a Rams fan. Don't hold that against me, believe it or not. They've obviously since left.
I don't know why you'd ever be a Rams fan.
Yeah, well, it's where I grew up, right?
Didn't they play in a dome?
They did.
How boring was that?
It was pretty exciting when they won the Super Bowl.
I don't know.
But anyway, obviously, I've converted to a Chiefs fan. I've completely left any of my Rams fandom in the past, especially now that they're gone. And
they're a good team.
They are a good team, but I despise them now. But anyhow, with that being said, I think realizing how rare of a situation the Chiefs are in right now is one that we probably shouldn't just, as fans, we probably shouldn't take for granted.
No, I agree.
The fact that they were the best team in their conference, they only have to win 2 games. Both of them are at home, and they're going to go to the Super Bowl. That's pretty darn exciting.
Right.
So with that being said, though, my prediction, at this point in time, I am probably blindly optimistic, but I think they're going to go to the Super Bowl.
You think so?
I do.
Wow. What do you think is going to be the key? I know we talked about this a few episodes back with Jesse, but what do you think is going to be the key to them getting to the Super Bowl? What do they have to do? Obviously, they win 2 games, but what do they have to do to win those games?
Their defense is going to have to
step up.
Yes, they're going to have to step up, but they're going to have to force turnovers. Like if we
that's what I said.
That game against I know, I remember. And you were right. You were right.
I appreciate that. We've got that on record. Yeah, it's on video now.
But you made a good point when we talked about this. I don't know.
It was a while back. Right.
But if we saw the game this last weekend against the Raiders, now granted, I know that the Raiders are kind of a lowly team.
But they were gunning for us. I mean, they were fired up.
Definitely. They wanted to come out and win, but the defense forced 4 turnovers in the first half, and it was never even close.
Yep.
So with all of that being said, I think they're going to have to do that. I understand people make the argument that, well, the Chiefs haven't beat the playoff teams or this or that. I think if you look at the way that Mahomes played and the way that the offense played and how close the games that they lost to good teams were, I would make the argument that Mahomes and the offense, kept the Chiefs in those games despite how poorly the defense played.
This is my question, though, to that point, because you bring up Mahomes. I'm a huge fan, right? I grew up in West Texas. He played football at Texas Tech, but he hasn't really been on the big stage.
Sure.
I mean, the NFL is a huge stage, don't get me wrong, but now I mean, I think he's handling it, like a gentleman as far as personally. But I'm a little concerned of how do you think his performance is going to be when it's like, this is it. He hasn't. Some of those quarterbacks that have won national championships in college, they've been on that stage. And Texas Tech, again, I'm a casual fan because, again, I grew up in West Texas, but I don't know much about them. But I don't think he ever played in any – he might have played in a bowl or two. I don't know, but nothing huge. So how do you think he's going to handle that pressure?
I think a lot of that responsibility and almost mentorship is going to fall on the coaching staff to prep the team accordingly for what that's going to feel like, because – there was a lot of Chiefs games this year that were kind of flexed into prime time, right, where they played on the big stage as far as the regular season goes.
Right.
And I think there was a couple of games where it looked like, Mahomes specifically was maybe a little too charged up out of the gate, and he kind of dialed it back, and he kind of, he's just excited, as I'm sure most of the team was, and was able to kind of rein it back in and keep the Chiefs in the game. And I think that a lot of that is going to fall on the coaching staff to prepare these guys for what it's going to be like. Now, that being said, they're not going to know until they get out there and do it. But I think.
So you think they're going to go, though?
I think so. And I think that they have the ability, though, to obviously the offense is so explosive, and the fact that they have the ability, they've shown that they can make adjustments during the game. That's what's going to be important, too. If they fall behind 14-0 like that, this Chiefs team feels like that's not that much for them to overcome. It's more about, can the defense
stop them? Yeah.
Get a couple of stops or force a couple turnovers. And at this point in time, I don't think it's crazy that the Steelers aren't even in the postseason or the playoffs, I should say. And because I remember thinking, and I might have said earlier, that the Chiefs are going to have to beat the Patriots or the Steelers to advance, and they don't have to worry about the Steelers. They're not in it this year.
That's a good point.
It seems like conventional wisdom tells us it's going to be the Patriots that they're going to have to beat. And I think that I think the Patriots over the second half of the season, I think showed signs that they're mortal.
Right.
And Tom Brady himself has been
I don't know, though. Tom Brady.
It's going to be a different deal, yeah.
He's just that's what he does is he wins. I don't
he's won a lot of Super Bowls, but he's lost several too.
True.
So,
True. I know he's beatable. And I'm a Tom Brady fan, but, I'm rooting for the Chiefs. I think I'm optimistic too. I'm hoping that, I wouldn't say hope, but I'm a fan. I'm rooting for them to go to the Super Bowl. I don't know what my prediction would be, actually. I don't think I have one. Even though I know I asked you yours, I don't know. I can't really make a call one way or the other on that. I think it's 50-50 just because they haven't been able to do it before. And I think they have the pieces, but it's just, I don't know. I think it's going to come a lot down to the coaching staff prepping them appropriately and our defense stepping up and winning that turnover battle. I think that'll be huge.
Yeah, and I don't know what the breakdown of, who plays who. I don't know what that really looks like. Yeah. But I know that the Ravens and the Chargers are playing each other this weekend, which is going to be a good game.
Yeah.
But I think that just based on how the second half of the season went, I think one of the scarier teams that the Chiefs would have to play is probably the Ravens, because that defense has just been. They've shut down really good offenses.
Yep. We were lucky to win that game.
If it wasn't for that, crazy pass on 4th and 9 that Mahomes threw that Tyreek Hill caught, the Chiefs would have lost that game.
Yeah, but as of the viewing of the show, the Ravens might be already out of it.
True.
So we don't know.
Good point.
We don't know who they're going to play. So we'll see. We'll see. But anyways, thank you for sharing your predictions. Obviously, it's going to be a very entertaining January as far as football.
And you know what? If the Chiefs, as a fan, if the Chiefs get knocked out in the first round, will I be disappointed? Sure, but it was still an awesome season.
Awesome season. Probably one of the most entertaining seasons.
And the future's bright.
Yeah, one of the most entertaining seasons I probably think we've seen. Yeah.
And the future's bright. So. And Mahomes should be the MVP.
Okay, very good. Thank you, Corey. Thanks for your little rant there. You kind of went off a little bit. I appreciate that. So that's all the time.
If I didn't do it, you would have.
That's all the time that we have for today. Thank you again for tuning in. As always, please feel free to subscribe to our YouTube channel. We also have a podcast on iTunes. You can find me on Twitter at JakeFalconCRPC.
You can find me on Twitter at Corey Bittner KC.
Perfect. Thank you all, and we hope you have a great day.